My guest today is Josh Olszewicz. Josh, of course, is the lead analyst here at Brave New Coin, and he is a trader at Techemy Capital. And we're going to do something just a little bit different on today's podcast. But firstly, welcome, Josh. How are you doing?
Good, things are good. It's getting warm here in the States. It's flipping to what, spring or no, it's flipping to fall for you guys, right?
Yes, it is coming into, we call it autumn, I suppose.
Oh, okay. Autumn.
Yes, indeed. And so we'll get into things. So what I thought we'd do today, Josh, is because over at Techemy Capital, you and the team there, a lot of people will be aware, but you've launched a number of, I guess, non-custodial funds on Enzyme Finance, and anyone can essentially invest into these funds and get exposure to your trading strategies in a non-custodial way. So I thought today it'd be a good opportunity just to kind of get you to, at a high level, walk us through, how these funds work, how people can invest, what the investment thesis is, and how you approach, trading these funds. How does that sound?
Yeah, that sounds good.
So should point out to the listeners that, if you're listening to this on, Apple Podcasts or Spotify or whatever, Josh and I are recording this. So if you want to see the actual, the visual representation, which is probably quite recommended for this particular podcast, you will find that on the Brave New Coin YouTube channel. But, if you just want to listen to us talk, that will probably work as well. All right, let's get into it. So I guess, Josh, my role today, I'm obviously the podcast host, but I'll just act as the kind of, my role will be the investor. I'll be asking you the tough questions, and hopefully we'll all learn a little bit more about the process and how all this stuff works. Okay.
Sounds good. Feet to the fire. I'm in the hot seat.
Yes. All right. So let's first off, we'll talk about the first portfolio or fund that you guys at Techemy Capital launched, which is called the Holistic ETH-BTC portfolio. So this is a portfolio that you actively trade, and the idea is it provides exposure to Bitcoin and Ethereum price action, right?
That's correct. And the holistic part of it refers to both fundamental and technical analysis. So my job here for this fund portfolio is to decide based on trend metrics, based on on-chain fundamental metrics, based on days destroyed. I think there's a list in the description below here, but it's 10 or so metrics. Most of the technical metrics are trend-based metrics.
Yes.
So it's my job to decide: are we bullish? Are we bearish? Are we neutral? And then between that, are we more bullish on ETH than BTC? Are we more bullish on BTC than ETH? Are we expecting a move in ETH versus BTC? Stuff like that. That's something that the goal here is to outperform both ETH and BTC. That's the goal. The
Yes.
benchmarks in USD. The fees, the performance fees, the management fees are in USD. So yeah, that's just something to keep in mind for people who are wondering.
Yeah, well, that was going to be one of my questions, and I think that is kind of it is probably the most important question. Is is if someone is not a trader themselves, and they're a holder of Bitcoin and ETH, and that from most people's point of view, it's quite difficult to outperform a buy and hold strategy. But that is essentially your goal here, right?
Correct. So I guess for people who have no idea what this is as well, Enzyme, originally Melon, is a way for smart contracts to take control of custody. So we at Techemy Capital, I personally, I don't touch any of the money. It's all locked into the smart contract. And then how that works on the back end is the smart contract says this is what to do with the money based on what I tell it to do. So if I go in to trade ETH for, let's see, where's ETH here? If I trade some of this, I can trade whatever I want for whatever else I want. In this specific fund, it's just ETH versus BTC versus USD. So I can go through this process and the funds then follow along basically with what I tell them to do. So I'm pulling the strings in the back end, but I don't touch any of the money ever. So that's an important aspect of this that's new and exciting in a portfolio management sense, because that's not really something that legacy, with legacy finance, you have to give custody, give the money to somebody to custody, right? So this DeFi helps eliminate that barrier, definitely.
Yeah, exactly right. And I suppose we should just cover that off. So the way that people invest in any of these funds on Enzyme and a number of the other platforms across DeFi as well is you really just need to have some ETH in a MetaMask or a MetaMask equivalent, and then you come along and you press that big fat deposit button to essentially invest in the fund after you connect to your MetaMask, right?
Yeah, and the UI is going to change soon for Enzyme. It's going to look a little better shortly. But when you first go to the website, you'll see this leaderboard. You can search for us if you want, or you can look at other funds, whatever you want to do.
Yeah.
And from there, you can go into the fund, deposit, withdrawal. The first thing you do is you connect a MetaMask, and then it'll prompt a permission type, the typical MetaMask. Do you want to connect to this sort of thing?
Yep.
And with Enzyme currently, you can deposit ETH or USDC. If you deposit ETH, you pay an additional fee because it has to swap the ETH for USDC. So that's something to keep in mind. Is it's going to be more expensive to deposit ETH because there's that additional swap fee.
And so we can,
the reason for that, by the way, is just so that, like, for me as the investor or the management person, the portfolio manager, I have just a baseline benchmark of USDC. So that way I'm not getting all sorts of stuff inbound. It's all just always going to be USDC on my end.
Okay. And is it safe for people to, I suppose, the general rule of thumb would be if you've got if you've got a significant amount of, capital that you want to invest in here, then, maybe you want to have it in MetaMask, but then in some kind of hardware wallet or something as well, right?
Yeah, just MetaMask is a bit flimsy security-wise. Most people, it's fine for most people. Most people aren't going to have any issues with it. But just keep in mind that there are ways to increase your security if MetaMask isn't your favorite solution. There are other things you can do, certainly, in that front.
And so if we're just looking at the dashboard here, so you can see the AUM, assets under management, is just a touch over $4 million, and you got 58 depositors. So does that mean there are essentially 58 different entities have invested a total of just a shade over 4 million into this fund, right?
Yeah, and the cool thing about this, which some people may or may not like, is you could literally go through and see who owns exactly how much of everything. Like, you can see, oh, this person owns 25%. This person owns, and this is
that's not me, by the way.
It may be the same person. Like, you don't know that unless you actually look into this stuff. That's the other thing. Just because it's different addresses doesn't mean it's not the same person. But
and
assuming it's not.
Slightly sensitive question, Josh, and you obviously don't say who any of these people are, but do you actually know yourself who any of these people are?
No, I don't personally know who they are. At T-Cap, we have a KYC AML process where on their end, they'll probably know who these people are as far as what they're investing, but I have no idea who any of these people are.
Yeah.
From my end, from their end, they'll know because of KYC AML stuff, but I will not know.
Let's just talk about that. So, in terms of how that works with Techemy Capital, so I think the Techemy Capital website is simply techemy.capital, and so that website has all the kind of the background information on these different funds as well. And I suppose there's a front end there if you're you know a professional investor, or someone who wants to kind of go through the whole KYC process and do their due diligence and do it all by the book, as it were. So that is one option of doing things, but you don't have to do it that way. You can actually just rock up to Enzyme Finance, as we talked about, with your MetaMask, and you don't have to do KYC if you opt to go that path, right?
That's correct. We don't currently whitelist addresses as far as knowing every single person, collecting all that information. Currently, we do not do that. Correct.
Yes. Okay. Well, talk us through the performance so far. Like, how long? When did this fund start? And what were your expectations? How's it playing out? And how is it tracking against your benchmark performance of, let's say, a buy and hold BTC or ETH strategy?
Yeah. So originally we attempted something like this on token sets, which I'm just going to talk about it because people might be wondering, where did all this come from? This idea. Token sets started this sort of thing, as far as, well, I don't know if they started it, but they probably popularized it, at least initially.
They were the first to get product market fit. Yeah.
Yeah, maybe. So they had this non-custodial portfolio management tool, very similar process, where you deposit USDC or ETH or whatever. The issue with that platform was gas fees, which, because of how they structured the trades and because of how we had to go through, if I was moving from ETH to USDC, it wasn't just that simple. It moved it from USDC to compound USDC. So that added an additional swap fee. And anyway, there were inefficiencies there that hopefully they've cleaned up by now. I don't know, but fees just got to the point where it was costing us $1,000 a trade, which is insane.
Wow.
Because of gas fees. So we moved to Enzyme, sorry, in the beginning of the year. So this started in I guess late January. So really, we didn't really start till February, as far as the first day where AUM got deposited. And you can go back and check, right? I guess we can go to deposits and we can look. You don't have to take my word for any of this. You can just look. When was the first deposit? It was on January 21st. So it's all right there. The dashboard just serves as a way to visualize all this other stuff, but you can look at the trades as well. And when I made all of those, so you can see exactly what I was doing and when. So that's super interesting. So yeah, that's the AUM aspect of it. When we started, this isn't our first rodeo as far as the non-custodial portfolio management tool systems. And as far as beating buy and hold, I haven't actually checked right now. We're 3 months in, I guess? 2 months in? I don't know. I haven't looked, honestly, what it is against buy and hold. But the other reason we moved to Enzyme is because I have the ability to short ETH and BTC through SNX. So this gets like super complex and complicated for people who have no idea what I'm talking about here. But what I can do through synthetics is I can long the inverse trade. So I can go long on a ETH derivative, which is effectively shorting ETH. So I hope that makes sense to some people. But if you don't know what that means, essentially what it means for me is that I can go long on the short side. So I can effectively short ETH, short BTC. I also have the ability to do what I'm doing currently, which is throw some of the AUM into interest-bearing vehicles like Aave USDC. And this dashboard is going to change eventually, but I can I can go into this and see like where's the best APY, and I can, I can make smarter decisions certainly than just like searching all these websites individually.
Yeah. Okay. So a couple of things that I want to pick up on there.
Sure.
First, so yeah, it's fascinating. You showed sort of further down under the dashboard how there's a complete history of all the trades that are made, right? So, and
Right.
I've had Mona, who I guess she's the CEO or the founder of Enzyme. She's been on the podcast a couple of times, and she's talked about how it really is because for a long time, I guess portfolio management and sort of legacy finance is a little bit opaque, shall we say?
Yeah,
But
definitely.
here, everything is literally on chain. So, and if you combine that with the sort of the leaderboard, and over a certain period of time, you can see which traders or which funds are performing really well, and you can actually dig into their full trade history. So it's completely open and transparent, and just allows anyone with a talent for trading to kind of prove themselves and show off their well, their performance really, which is quite incredible.
Yeah, and ideally, your AUM like this in this fund, the AUM is big enough where the gas fees aren't that big of a deal. I'm really not that making that many trades on a weekly basis or daily basis, at least at the moment. For the most part, it has just been trend following type of moves here in the interim. But gas fees, for the individual, if you're trading this on a DEX, like on our DeFi fund portfolio, if you're trading that on a DEX, your gas fees are going to be what I'm paying on our end as far as the managing side, which is a lot more than just putting money into something like this. You're only paying gas fees on the way in and on the way out as far as an investor in this portfolio.
Sure.
But if you were to do this individually and take all these trades, it would cost you a lot more in fees.
I want to come back to the shorting side of things, Josh,
Sure.
because I think that's really interesting as well. Because if we talk about this buy and hold strategy, that works really well in a bull market, which we are in at the moment. But at some point we will probably enter the dreaded crypto bear market again. So am I right in thinking that one possible way of, I guess, mitigating against the bear market, because the problem is a lot of holders, they don't want to sell their BTC and their ETH because they're going to get, they're going to trigger a capital gains tax event. But they do they don't want to see their portfolio drop by 80% either. So as one possible solution would be investing a chunk of capital into something like this, and then they can just kind of let you as the professional trader kind of short the bear market on the way down. I know it's not that simple, but in broad strokes.
Yeah, that's correct. I mean, it'll vary. Regulations will vary tax wise from country to country. But currently, how it stands, yes. So for the user, at least to my knowledge, I'm not an accountant, I'm not a tax professional, I am not a lawyer, as they say. But from a user's perspective, they make a deposit and a withdrawal, and then I'd assume they would pay any capital gains taxes should they be eligible in their country for that sort of thing on the way out. So there's very clear withdrawal deposit sort of scenario setting up for a taxable event on the user's side of things, definitely. So that's a one-time taxable event should they hold, stay in the fund the entire time, basically, whatever that time component is. And we should also say there's no mins, there's no maxes. You can get in and out within a day. That's the beauty of this as well. You can, if you don't like what I'm doing after a month, you can just leave, right? Like you can do whatever you want. And there's no penalties. There's no, your money isn't trapped. That's the other thing I like about this.
Yeah.
From
Okay.
our perspective, just to wrap this up about the AUM, from our perspective, we want to collect a bunch, at least for me, I want to collect a bunch of AUM and then do my thing for a year or 6 months. And, at that point, if people don't like what I'm doing, they can leave. This actually makes it more incentives for me to actually do well, because if people don't like what I'm doing on a day-to-day basis, they're just gone, right?
Well, that's right, and people can actually see what you're doing. So obviously,
Right,
you're
right.
incentivized to do the best that you can. Okay, well, let's just finish off on this one before we move to DeFi. But the way I want to finish off is I'd love to just get your high level thoughts on what you see happening with BTC and ETH at the moment. You know, we've just there was this rumor of Facebook. I always thought that that was kind of a ridiculous rumor, but obviously that rumor proved false. Facebook did not announce that they are holding Bitcoin on their balance sheet in their earnings report this morning, but that aside, yeah, BTC, ETH, how are you approaching things at the moment? What do you see?
Yeah, it's a bit of an odd tug of war, because the pair ETH-BTC is surging, which means ETH is gaining
Yes.
against BTC, and BTC is a bit flat or down since April. ETH is up 30-40% since April. So it's been tough on the give and take, because it's always difficult to say, like, I want to trade the charts independently, trade ETH-USD independent from BTC-USD. ETH-USD looks much better than BTC-USD. That should be reflected in the allocations here, which it currently is not. But the idea here was, the way this was set up is that typically BTC eventually catches up, maybe not completely, but partially. And thus far, BTC has just done nothing against ETH in the near term. Now that may change in a couple of weeks and a couple of months, but in the near term, ETH has certainly outperformed BTC. And the other part of this is, why is 25% not in either of these, is because the market had 25% pullback from highs, from all-time highs. DeFi had a 40+% pullback in like 2 days, 3 days, just completely violent. So it's hard to want to immediately deploy 100% of the funds back into that situation, when sure, it could have been a buy the dip opportunity, but I would have much rather just take some time here, be sure that this is real. I mean, we're talking about the other part of this, when you're talking about 4 million AUM, is I have to consider the ability of DEXs to just get me in and out of stuff like this. If we look at just right now, if we look at trading, I'm just curious, just again, so people can see how the sausage is made here. If we go to like 500,000 USDC, it should tell me, I guess I don't have enough in the balance, but anyway, I have to consider slippage. I have to consider the amount of trades it's going to take. I have to consider gas fees. Like this is all part of the equation. So right now, 25% of the fund is just sitting in Aave USDC, basically collecting a yield, collecting interest at the moment. So yeah, in a perfect world, I would have bought the dip ferociously on ETH. It would have all been in ETH, right? But that just isn't obviously what happened in this case, because of that BTC expectation that it would catch up. I do think both are still bullish. I do think both have a ways to go. ETH to 4,000, BTC to 70, 80,000 this cycle for sure. So I think we'll be fine in the long run, definitely.
Okay. Oh, that's interesting. And so if we're talking about cycles and what kind of time frame, where do you see that sort of topping out potentially?
So it depends if we have currently, based on the on-chain metrics, we're still fine for just a continued rise over the next few months. But if the on-chain metrics start to peter out towards the end of Q2 over the next 2 months, then that would suggest seasonality is once again correct, in that Q2 is bullish, Q3 is bearish, and then that gives room for Q4 to potentially be bullish once again. So the fact that Q2 has been bullish for altcoins relative to BTC isn't a surprise. What remains to be seen is whether or not we'll have a Q2, Q4 bullish pattern like we typically do on backtesting or on historic data. Seasonality holds pretty well on those quarters. So that's really the big thing, is what to do in Q3. How does it look towards Q3, rolling into Q3? You know, that's the time when my guess is most of this fund will be moving into Aave USDC or something like that at that point in time. But we'll see. We'll cross that bridge when we get to it. So yeah, I'm still bullish, very bullish in the near term on both of these. It's just I want to be sure that we're not going to keep collapsing on BTC, and ETH's not going to stall. I mean, ETH hit all-time highs like back to back over a few days, and then pulled back 20% over and over again. So it's hard to want to jump into that immediately.
Yes, indeed. Okay, well, very good, Josh. Let's move to the Techemy Capital managed DeFi portfolio. So now we're really getting a little bit gnarly. So I guess the top line here, what it says on the website is this actively traded portfolio provides exposure to the Ethereum DeFi ecosystem. And well, I mean, this is there's a lot of different assets here, but okay, well let's start from the beginning. So this is a much newer portfolio. So this is just launched very recently. So you can see there's $362,000 in AUM, 22 investors so far. But Walter, what's the kind of the big thesis here? Obviously, it's DeFi, but how are we approaching it?
Yeah, so for me, it took me a while to get on board the DeFi train, but I think it's pretty clear that most of this stuff that's been around for a few years isn't going anywhere anytime soon. As far as, you know, I'm not allocating any capital into any potential rug pulls or anything like that. These are all projects that have been around for quite some time, at least relative to other DeFi stuff.
The more blue chip DeFi, I guess, is what people call it,
Yeah,
right?
yeah, exactly. Not necessarily like top 10 DeFi, but definitely stuff, household
reputable
names.
Yes.
Yeah, definitely. And you're right. We started this one on April 9th. And how I view DeFi is to break it down into sectors. So we have the exchanges, we have the DEXs, we have the DEX aggregators, we have lending and borrowing, we have oracles, and then we have just miscellaneous catch-all wrappers, WRAPPERS, not like Eminem the rapper, but that kind of wrapper. So like Ren would fall under that category, Republic token.
Yes.
And then from here on, the idea was to not be overweight any single sector and be sure that we're at least 20% in every sector. We have multiple coins per sector. We're continually monitoring additional coins or DeFi projects to add to this. But this is the initial list, at least. It's around 15 to 20, I think, coins. So yeah, I mean, this one's super interesting for me. There's a committee. We have committee meetings. So we talk about, you know, what did Josh do over the past 2 weeks? What did DeFi do over the past 2 weeks? I have to run by my trading decisions mostly through them. They have to approve or not approve of what I'm doing, that sort of thing. And we just have parameters that I hold to. And that's how this one works.
So am I right in thinking that the approach here is more just to, in some ways, kind of you allocate the capital to these different sectors within DeFi, and then obviously, you know, some you're capturing there's various yield strategies as well. So it's more about allocating the capital and letting that grow rather than sort of rapidly trading back and forward and trying to actually gain on the appreciation of the asset itself.
Right. So for this one, more so than the ETH-BTC fund, gas fees are very real because I'm rebalancing more than trading a lot, or at least I have been recently. I kind of had to wait for gas fees to come down because I was paying like 0.2 ETH for some of these trades, which at 20 tokens, you know, we're gonna eat a lot in fees at that point. It just didn't make too much sense with DeFi, not exactly roaring at the time. Chart wise now though, this stuff looks a lot better. But anyway, so yeah, you can see all the trades I make. Again, same story, same spiel. You can see all the trades I made and when. 427 is when I deployed most of the remaining capital I had in this at the time. And yeah, so I keep a spreadsheet over here if you want to see like what I do, again, how the sausage is made.
Yes.
This is part of it. I'm always monitoring the allocation. And then every 2 weeks, like I said, we have these meetings where I give my notes and see what's going on. You know, are we bullish? Are we bearish? Am I holding off on getting into Bancor this week? You know, what am I doing? Am I looking for mean reversion? So we keep all this on the back end, but yeah, this is how it works, really. I mean, it's not like a big mystery as far as what I do and why. I talk about it every week anyway in the videos I do.
You
But
do. And so
that's
what the appeal here for, you know, your, I guess, just a sort of typical investor is that, you know, to be frank, it's going to be a little bit of a pain in the ass for most people if they were to, you know, buy and hold all these different DeFi tokens, because you know, you got to sort of move around different exchanges, whether it's DeFi or Binance or wherever, just to kind of collect them all, and then you've got to store them. Whereas potentially it's an easier solution just to come along to Enzyme, and you just have to do effectively one trade, and then you have exposure to all these DeFi tokens and exposure to the DeFi ecosystem. And essentially that's what this fund is all about, right?
right. It's not quite an index, but it is similar in that it's like what we think are the broad popular winning tokens. I think between this group, it's probably too early to pick like winners and losers individually between everything.
Yeah.
You know, if I was confident in like, this is going to be the DEX of the future, this is going to be the Oracle of the future, this is going to be, you know, Thorchain is going to be it, right? Like we could easily like trade that stuff, but I think it's too early for anybody to say like Sushi's going to be Uni or Band is going to beat Link. Like I don't think it's early. It's too early to like really say. So one strategy when you're not sure is to just say, okay, this is what we like. This is what looks good based on fundamentals. This has a team of people doing things and stuff, right? And it's actively coded, and there's continuous updates. There's layer 2 ETH involvement, all this sort of stuff. It's important to pick those kinds of projects.
And so what would be the risks with this particular fund, Josh? So let's say hypothetically, you know, we come to, you know, the end of the year, or we enter the bear market again, and that could be tough for DeFi. No one knows what will happen, but you know, DeFi had this incredible bull run last year, and has sort of been, you know, consolidating, but you know, new projects doing extremely well. But yeah, so what do you think happens? What are the risks, and how would you approach a bear market for this fund?
Yeah, so the broad strokes for me were from November, really pre January, we were basically consolidating in all of DeFi. Post January, we exploded, leading into mid February when ETH fees exploded. And now the ETH fees are coming back down again because they increased the ceiling on effectively block size, but it's the gas size, or gas ceiling is what they call it. That allows for lower fees, bigger blocks, basically. Not exactly, but that's how I think of it. So as long as ETH fees can stay down, as long as these projects implement layer 2 solutions for ETH, and they can keep the users happy, they're not going to want to move to BSC, PancakeSwap, Binance Chain, that sort of thing. So that's the fundamental argument, the fundamental thesis for this stuff actually surviving any sort of consolidation in the near term. You know, it obviously isn't exploding crazy like it was in January. But this, you know, there's some growing pains there. They're figuring it out. So it's got that going on. It's got EIP 1559, which isn't really going to move the needle on fees per se, but it may bring people back into the ETH fold. That's coming later this year. As far as technicals are concerned, looking at all these in like an index fashion, there wasn't a big concern just yet for anything bearish happening. We had like a fake out breakout. Most of this stuff pulled back like 40%. I wasn't allocated at the time, so you're not going to see that show up here. Clearly on the AUM, it went from 104 to 95, so that's what, a 9% move, I guess. Whereas if I was fully allocated, this would have gone down to like 60 cents or something like that. So I was kind of waiting for that. I was kind of waiting for some AUM to build up because of gas fees. Didn't really make sense to deploy the capital of the 20 coins. And I had to wait to make sure like this DeFi wasn't going to just crumble, right? Like I can't just, as a portfolio manager, I can't just hope that that's going to be the bottom. So all that stuff happened. It looks like we're okay. And it looks like in the near term, DeFi's going to do fairly well and has done fairly well over the past couple of days, over the past week. That's kind of where my head's at with this DeFi stuff.
Very, very nice. Now, so you see that, so the AUM at the moment is, it's 362 100,000 US, and so because the fund has only just started earlier this month. So as people deposit more capital, how do you go about allocating that? Do you just allocate it across the whole the different holdings according to whatever allocation strategy you have at the time, or how does that work?
Yeah, so I'm allocating, again, based on that sector, those 5 sectors. Like I don't want more than 20% in any given sector, but I can intra-sector, I can say like, okay, 1inch looks better than ZRX right now, so I'm going to allocate more into ZRX, or Band has the potential to outperform Link in the near term, so I'm going to add more to the Band position. Stuff like that is what I consider, but I'm always paying very close attention to total allocations intra-sector. And just like the ETH-BTC fund, I have the ability to yield farm this stuff if it makes sense. I have the ability to lend it out. I think currently we're lending out a small percentage of this in USDC, virtually nothing really in the grand scheme of things. But I have the ability to do so. So if the market does go south, I have the ability to lend. I have the ability to short some of this stuff through synthetics, certainly not all of it. But if we were bearish, what I would do is to liquidate what I couldn't short what I could based on technicals, and then put the rest into something like USDC or whatever made sense at the time for lending purposes. So back to your original question, I just, I reallocate the percentages, shuffle it around based on what I thought looked good on technicals or what made sense based on technicals.
Yeah. And I know you've been trading crypto for a long time now, Josh, but now with the kind of I guess the added pressure of effectively being a public trader now, not just on BTC and ETH, but also DeFi, which I guess what I'm trying to say is, how much of a mental effort is it to not just be trading this, but to keep across, the fundamentals and technicals across so many different sectors and different assets? That's got to be hard work, Josh.
Yeah, I mean, it's work if it's not something I did already, I guess. It's stuff I do every day, all day anyway. So
Yes.
That helps. We have Aditya as well, who helps a lot with the research and gathering all the news items and just keeping me informed, keeping the portfolio informed as far as what's going on with all this stuff, including things that aren't in the portfolio. I mean, we're always watching, like I said, we're always watching everything that's going on. Certainly I am on a technical side, but he also catches whatever I don't necessarily see. So that
Sure.
also helps.
So there's a big, solid, extremely capable, resourceful, and smart team behind you, is what you're saying.
Yeah, I mean, I'm in Telegram, Discord, Twitter. Obviously, that's really where I get most of the news.
Yes.
Anything that's important will bubble to one of those 3 areas for sure. And yeah, I'm always looking at the DeFi metrics, especially now that I I've looked at them every week for a while now, but things like TVL, things like fully diluted value, the yield farming, is PancakeSwap going to beat ETH, like that sort of thing. Definitely looking at all that nonstop all the time. So yeah, it's definitely interesting. I like the differences between the two. This one's definitely more risk from a trading perspective, because like anything can happen. Let's be real, in DeFi land, good or bad, right? Like, I don't want to scare people, but it's just the reality. Like, it's just more risky than saying I'm going to trade ETH and BTC. This is my guidelines. That's all I'm going to do. Whereas this stuff, I mean, we saw some of this stuff. Like I said, it was down 40+% in a day, and then some of this stuff bounced back extremely well over the past week. So the volatility here is extremely high relative to ETH and BTC.
Certainly is. All right. Well, let's just start to wrap this up, Josh. Just closing thoughts, and I guess if listeners or watchers of this video, and look, I know that you have a massive community of people that watch your videos on the Brave New Coin YouTube channel, and they're never shy of asking questions of the comments, which we love to see. So if people have questions about any of this, do just chuck it in the comments on YouTube, and probably not me, but maybe Josh or someone from the Techemy Capital team will certainly endeavor to address any questions people might have. But just to finish off, Josh, it just does seem like, these kind of, platforms like Enzyme and everything that's happening in DeFi really is the bleeding edge of finance, shall we say. So I'd just love to get your honest perspectives on what it's like to kind of be on the edge as a kind of, open, transparent, non-custodial DeFi fund manager, and what it's like sort of, because, these platforms are all very early stage. And so everything is, it's not clunky, but it's not easy either, right? So, is this the future of finance? Where are we going?
Yeah, it's definitely interesting. I think for a lot of us who've been here a while, it's nothing like crazy or new, or it doesn't feel weird to be able to do stuff like this. It just feels like, okay, like this is the natural progression of things, because we have the blockchain, and ultimately that's what's powering this, is the smart contracts for ETH, and the fact that all these assets, there's just insane interoperability on ETH, in the ETH ecosystem. I mean, what we didn't say was, we didn't talk anything about Binance Chain or Solana or any of that other stuff, but
Hush your mouth, Josh. Hush your mouth.
I'd imagine a day where tools like this have the ability to trade anything.
Yes.
So long as they have access to whichever DEX, and that DEX has access to whichever chain. I talk about this a lot in the YouTube videos that I record for BNC, but the consumer doesn't care what chain is routed through what. Like, all I care about is getting what I want from what I'm asking for, right? So if that's on Solana, right, like, who cares, So I don't think it's going to necessarily be all ETH all the time for DeFi. It's good that it's multi-chain. It's good we have competition. Feels good and normal and natural that this is the progression of things, as far as kind of the purpose of blockchain, like record keeping, right? So, and the transparency part of it, I love that. I love that so much. I love that people can just see, like, he said this, what is he doing? He's actually doing that. Okay. Like, I don't know. It all lines up for me naturally, as far as what I believe in and what I like doing. So
fantastic. Very nicely said, Josh. Okay, well, I think we'll leave it there. So listeners, thank you for listening or watching, and I do hope you found some value from this. As I say, just throw some questions in the comments if you have them. But for now, we are out of here. Josh, thanks for your time.
sounds good. Thanks, Andy.
All right, this was the Crypto Conversation for Brave New Coin.